Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 4th of September 2020, and yesterday we published two videos. One in the afternoon entitled Gold, Bitcoin and Whisky, or I should say in the night, entitled Gold, Bitcoin and Whisky, and earlier in the day, should you buy more gold and silver before the US presidential election? Now tomorrow we shall of course be publishing our gold and silver weekly update, but we thought that today we would take a look at the very important non-farm payroll report announced a few hours ago and show you how markets have responded. We did say that today was probably the most important data declaration day of the week, although there was important information to be gleaned really from Wednesday and Thursday as well. Now, we pointed out in yesterday's video that in view of the ADP data and the weekly jobless claims, we were expecting the non-farm payrolls to be quite positive, and so it has materialised. Now, rather than reinvent the wheel, Bloomberg has provided a very good summary of that report, which we shall now show you, and then comment afterwards as to how the markets have reacted to it. Bloomberg article dated September 4th, 2020, 2:31 p.m. GMT +1. Headline: US unemployment rate drops by more than expected to 8.4%. The US labour market rebound extended for a fourth month in August, offering hope that the economy can continue to recover despite a persistent pandemic and Washington's standoff over further government aid to jobless Americans and small businesses. Non-farm payrolls increased by 1.37 million, including the hiring of 238,000 temporary census workers, according to a Labour Department report Friday. The unemployment rate fell by more than expected by almost 2 percentage points to 8.4%. The dollar and yields on 10-year treasuries climbed after the report, while the S&P 500 rose at the open. The median estimates in a Bloomberg survey of economists call for a 1.35 million gain in non-farm payrolls and an unemployment rate of 9.8%. It was 3.5% in February, matching a half-century low. The data signal progress in the labour market is continuing, though at a more moderate pace since the initial bounce back in hiring, with payrolls remaining about 11.5 million below the pre-pandemic level. The pace of further gains likely hinges on whether America improves control of coronavirus infections, as well as an end to the stalemate in Congress over another stimulus package, something that could lose urgency after Friday's numbers. The drop in the unemployment rate to single digits, with 2 months before the November election, could give a boost to President Donald Trump, who has often polled better than Democratic opponent Joe Biden on economic issues, and is counting on such sentiment to help him win a second term. Trump tweeted after the report that the jobless rate went below 10%, quote, faster and deeper than thought possible, unquote. It's a solid report. Job growth has moderated for the last few months, but it seems like the rehiring of workers is still underway, said Ryan Sweet, head of monetary policy research at Moody's Analytics Inc. This was a big step in the right direction. We need to maintain this, but without fiscal stimulus, that will be hard to do. One troubling figure from the report: the number of permanent job losers rose by more than 500,000 to 3.41 million, after being little changed in July. The majority of the 10.3 million people who lost their job or completed a temporary job, about 6.16 million, continue to be on temporary layoff. Also, news of job losses keep coming. In recent weeks, a host of companies from American Airlines Group Inc. and United Airlines Holdings Inc. to Ford Motor Company and Bed Bath & Beyond have announced plans to cut workers. Lawmakers remain at odds over another comprehensive stimulus bill after the supplemental $600 in weekly unemployment benefits and small business aid expired. The payroll figures showed broad gains across industries. Retail added about 249,000 jobs, more than in the prior month, while professional business services increased by 197,000 and transportation and warehousing was up about 78,000. But the gains in leisure and hospitality businesses, such as restaurants, that had driven prior months cooled significantly in August, with a rise of 174,000, compared with 621,000 in July. Also, the 29,000 rise in manufacturing jobs was less than half the median estimate of economists. Adjusted for the misclassification of workers who should have been labelled as unemployed, a problem plaguing the data in recent months, the jobless rate would have been 0.7 percentage points higher in August, the Labour Department said. The report also showed a strong gain in one key figure, the employment population ratio, which jumped 1.4 percentage points to 56.5%, though that's still well below February's level of 61.1%. Obviously, it's not encouraging to have people shift from temporary to what's considered permanent job loss, said Michelle Meyer, head of US economics at Bank of America Corp. But if you take a step back and look at the 8.4% unemployment rate, it's well better than we could have imagined. Now, the participation rate, which is the share of the population that is either working or actively looking for work, rose to 61.7%, after declining the prior month, potentially reflecting more Americans looking for work once more, as the supplemental $600 in weekly jobless benefits expired. The so-called prime age participation rate, or the participation rate among those aged 25 to 54, rose to 81.4%, though it's below June's level of 81.5%. The much better than expected improvement in the jobless rate spanned demographic groups, though white and Hispanic Americans saw larger declines in the rate compared with Asian and black Americans. The difference between the white and black unemployment rates widened to 5.7 percentage points from 5.4 points in July. The gender gap narrowed, though. Among adult women, the unemployment rate fell 2.1% to 8.4%, compared with a 1.4% drop among men to 8%. The U6 rate, also known as the underemployment rate, declined to 14.2% from 16.5%. Unlike the headline unemployment rate, also known as the U3 rate, it accounts for those who quit looking for a job because they were discouraged about their prospects and those working part-time but desiring a full work week. The report also showed average hourly earnings rose 0.4% from the prior month and were up 4.7% from a year ago, though the figure has been volatile throughout the pandemic, given the scale and distribution of payroll losses and gains. The average work week edged up to 34.6 hours. That's the end of that article. Quite a few figures there, but the overall consensus is that it is a favourable report. Okay, the time currently is 16:50 GMT +1, and equities are down across the board. The Dow and S&P 500 index are both down around 2%, and the Nasdaq is down a little over 3%. UK and European markets are also down between 1 and 2%. The dollar index has strengthened and moved above 93, though only just at 93.04. Gold has fallen around $13 today and currently stands at $1,919, and silver is down around 13 cents and stands at $26.50. Now, we shall go into a little more detail tomorrow as to why both metals have fallen back, and especially when considering in the early part of the day they actually rose quite reasonably, with gold at one point touching 1950 and silver peaking today at 27.09. What we can say, though, for the moment, is that the economic data appears to be better than anticipated, which means that the risk hedging becomes less urgent, and so gold and silver have lost a little of that investment interest. And of course the equity markets are fearful that future stimulus may be limited, especially if the economy is picking up. It really is a funny old world when the stock markets regard good economic news as potentially negative. Now, there is a fair amount happening on the political front. But as we are actually going out to dinner tonight, we shall end this podcast here for now. I think with all the figures that Bloomberg quoted, we could all do with a little mental rest and relaxation, and we'll provide a more comprehensive update tomorrow. Meanwhile, do share your thoughts, and thank you so much for listening. And if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.